Hola, buenos días a todos. Soy Fernando Luque, editor para Morningstar en España. Primero quería felicitar a María por la publicación del libro, que la verdad tiene el mérito de recoger ejemplos prácticos de lo que hacen las gestoras a nivel de sostenibilidad. Y yo creo que también muestra la diversidad de respuestas que tienen las gestoras en términos de sostenibilidad. Y de diversidad vamos a hablar en este segundo panel. El primero ha estado muy centrado en la transición hacia una economía baja en carbono y el tema de la descarbonización de las carteras de inversión. En este panel yo creo que vamos a tocar muchísimos temas distintos, aparte también del tema de la descarbonización. Y para ello quería empezar primero, well, I will switch in English now. My first question is for Julie Fardou. Julie is head of ESG External Relations at Amundi Asset Management. Julie, how does Amundi conduct its dialogue with companies? Could you briefly tell us a success story in this field?
Yes, good morning, everybody. Yes, so about engagement with companies, we clearly believe it's a key point of responsibility for us asset managers and for investors in general, because of course if the main objective is to deliver performance, we are really convinced that now there is growing awareness of the responsibility of investors and asset managers to encourage companies to act in a responsible way. Rating is not enough. We have a dedicated ESG analysis team which rates more than 6,000 companies. So it's a very broad coverage. It allows us to build responsible products. It allows us to analyze risks, to find opportunities. But in the end, ESG rating is only a tool. It doesn't make things change in the real world, and that's why engagement with companies is definitely key. And we try to implement it through three main axes. The first one is to have a strong ongoing dialogue with companies, because of course, even if we have a dedicated ESG team, our analysts cannot discuss with 6,000 companies, so we have to rely on data providers of ESG data. But we try to engage, to discuss each year with 300 companies to fine-tune our ESG rating, to understand their specific sector issues, and to put a kind of positive pressure, let's say it, on companies, or sometimes to also inform them that without some information we will have to give them a bad rating, and that we need them to disclose some information to allow us to assess the rating in a relevant way. The second main axis is engagement, a strong engagement for influence policy that has started in 2013. And the objective, because when you do ESG analysis, in general, you compare companies within a sector to define the best practices and who are the best-in-class players and who are the laggards. But the objective is also to be able to analyze key sustainable challenges across sectors. So we define some key issues in terms of sustainable development, and we define a panel of companies in different sectors that can have an impact on these issues to engage with them. So just to give you a few examples, we have engaged with about the question of child labor in both the cocoa industry and the tobacco industry, because both these industries still rely a lot to child labor for their production. We have also engaged last year on the living wage, the question on the living wage, which is different from the minimal wage and which is often above the legal minimal wage. And we have discussed this topic with companies from the textile industry or in the semiconductor industries. So that's example, and it's the interest is really to have concrete feedback and concrete discussion and transparency about on these topics. And we are very happy to see that over years, companies are more and more willing to participate to this engagement dialogue with us. Some continue to refuse, of course, but a lot of them accept. And when they accept, 80% of them accept to be quoted in the engagement report that we release annually. So if you go on the website, you can really see the analysis we have done on companies with the name of companies, their rating on different criteria, the recommendation we make, and this is something very positive. And the third axis, as regards our engagement with companies, is of course the voting policy that we apply to we vote to something like 3,000 general assemblies every year, and we have announced in October last year a big plan to mainstream responsible investment across Amundi and to become 100% ESG in rating, investment processes and votes. And in voting, this has translated with the publication of a new voting policy last week, where we clearly stipulate that we will integrate ESG, that we will take some ESG issues in consideration in our voting policy and our shareholder dialogue, and with a focus this year on two main topics, one on the environmental pillar and one on the social pillar. So the first one is about climate change, and we would like companies to disclose their greenhouse gas emissions. So that's completely linked with what has just been said in the first panel, because we lack of data, we lack of comparable data as well. So we really will ask companies to produce this data and to announce, communicate on plans to offset or to reduce these greenhouse gas emissions. And on the second aspect, so the social aspect, we will pay attention on the wage balance, meaning so we would like to see the ratio between the average pay in a company compared to the CEO pay, because social inequalities are growing and are a factor of instability, and remuneration practices are clearly the first pillar on which we want to work with companies to not only to engage this dialogue, but really to make voting decisions.
Thank you, Julie. My next question is for André Temudo. André is head of wealth for BlackRock Iberia. I know that André speaks Spanish perfectly, so well, you can answer it in Spanish if you want. My question is about ESG ETFs. What type of investors are demanding ESG investing through ETFs?
Okay, thank you. And first of all, thank you so much for this initiative, for all the sponsors of this event, for Funds People Morningstar, all the collaborators, my colleagues here and in the previous sessions. I have a French name, but actually I'm Portuguese, so I will do this in Spanish, taking the example of Elena previously. So, yo creo que es una excelente pregunta que acaba de hacer Fernando, ¿no? ¿Por qué invertir y quién está demandando invertir en gestión pasiva, en ETFs, para esta inversión sostenible? Yo creo que aquí la pregunta menciona dos grandes fuerzas. Yo creo que es la intersección de las dos grandes fuerzas de la industria de asset management que estamos viendo hoy en día, ¿no? Por un lado, ETFs. Creo que ya todos conocéis ETFs, veo muchas caras conocidas también, que sé que utilizáis ETFs, que hace a lo mejor 5 o 10 años no utilizaban, con lo cual aquí vemos un crecimiento exponencial en la adopción de este vehículo de inversión, como una solución más para complementar vuestras carteras. Y para daros un ejemplo, actualmente en el mundo existen 5,2 trillones americanos de ETFs. Nosotros prevemos desde BlackRock un crecimiento, una industria que puede llegar a tener 12 trillones en 5 años. Esto significa un crecimiento de unos 20% de tasas anualizadas de crecimiento, con lo cual es un motor que va a crecer, que está aquí, que ya no es una tendencia, pero que se va a quedar. La otra parte de la pregunta es inversión sostenible y por qué utilizar ETFs, ¿no? La inversión sostenible pasa lo mismo. Es una inversión que ya no es una tendencia, como hablaba María antes, está aquí para quedarse, es una manera de invertir distinta y de futuro. Y nosotros creemos que la pregunta ya no es ¿por qué invertir en inversión sostenible? Y la pregunta debería ser ¿por qué no invertir ahora mismo en inversión sostenible? Es decir, si hace 4 años, 5 años tendríamos de abdicar de rentabilidades o de volatilidades para hacer un esfuerzo en un commitment a los valores de una compañía o de nuestra inversión, a día de hoy estamos comparando a la par, igual al igual, un binomio rentabilidad-riesgo y aparte, también importante, el factor precio, ¿no? A día de hoy cuesta lo mismo invertir en inversión sostenible y nos cuesta lo mismo en términos de volatilidad y rentabilidad. Y entonces la pregunta es, ¿por qué no? ¿Por qué no asignar o empezar a asignar porcentajes de nuestra cartera a inversión sostenible? Y a la pregunta, Fernando, más directamente es ¿por qué hacerlo a través de un ETF? Yo creo que es importante destacar 2 dinámicas distintas porque hay grandes grupos de inversores que se comportan de manera parecida. Uno son inversores institucionales y aquí hablo de grandes fondos de pensiones o aseguradoras. Y aquí hay 2 puntos fundamentales para este grupo y el comportamiento y la adopción de ETFs sostenibles. Primero es regulación. Creo que en todas las preguntas que han contestado antes y que vamos a contestar después se menciona la parte de regulación y lo que vemos es que tanto para aseguradoras con, por ejemplo, transparencia en look-through diario que un ETF le puede dar o garantizar, como en fondos de pensiones con comisiones máximas, que obviamente con un vehículo que sea más eficiente en costes puede aportar, creo que aquí el motor es clarísimo. Y este es el primer motor por lo cual las grandes instituciones están adoptando invertir de manera sostenible a través de ETFs. El segundo motor para estas instituciones es el desarrollo que hemos hecho, que se hizo en la industria de los índices, ¿vale? De los benchmarks. El primer índice sostenible se ha creado en 1990, han pasado 29 años, y actualmente existen más de 1000 índices ESG, ¿vale? Con lo cual el incremento, la demanda por esta diversificación ha sido creciente y lo que vemos es que esto es causa de la demanda de los inversores institucionales. También deciros que normalmente los guidelines de estos grandes fondos de pensiones o aseguradoras, pues la verdad es que lo que tienen que hacer es pegarse al benchmark, seguir el benchmark y obviamente que no tengo que deciros la mejor manera de hacer o la mejor o la manera más eficiente de hacerlo, ¿no? Con lo cual aquí el ETF gana una preponderancia muy, muy alta. Y luego quería comentaros el segundo grupo de inversores que pueden también estar aquí comprando ETFs sostenibles, que son inversores más de retail, más de wealth, ¿no? Todos nosotros que estamos aquí, nuestros primos, familiares, quien sea, quien está por la calle entrando por los bancos pidiendo y demandando este tipo de soluciones. Y aquí vemos una tendencia estructural. Los llamados grupos millennial, ¿vale? Que son el grupo comprendido entre 18 años, 37 años más o menos, y lo que vemos es que es un grupo que tiene características comunes. Pero solamente daros un dato. Estimamos que 30 trillones de dólares americanos de riqueza, de wealth, están siendo transferidos ahora en los próximos años entre baby boomers to millennials. Esto es muchísimo dinero, muchísima riqueza, muchísimo patrimonio que está siendo transferido para este grupo de personas. Y este grupo de personas se comporta de una manera mucho más sostenible que a lo mejor la generación por encima, sus padres, ¿no? Actualmente están incorporando sostenibilidad en todas sus acciones cotidianas. Están reciclando, por ejemplo, la basura en sus casas, están comprando vehículos eléctricos y obviamente que está incorporando este concepto de sostenibilidad en sus inversiones. Y entonces aquí la mejor manera que también ellos pueden ver es invertir a través de ETFs. La segunda punto que solamente quería comentar para terminar es la vertiente coste. Es una generación que tiene una mente muy abierta y sabe muy bien comparar, son personas mucho más informadas que a lo mejor éramos nosotros cuando teníamos su edad, y entonces comparan más, y al comparar más, pues obviamente que se declinan por soluciones más baratas. Ya no estamos en un entorno donde tendremos que pagar 1,5-2% de comisión de gestión por un vehículo que nos invierta de una manera sostenible, pero a cambio hoy en día tenemos soluciones como ETFs que podemos con menos de €1 al año invertir 1.000 euros de patrimonio. y esto es justamente la potencia de los ETFs. Básicamente es combinar las bondades de invertir de manera sostenible con las bondades de un ETF que sea líquido, transparente, básicamente sencillo y eficiente en costes.
Muito obrigado, André. Our next participant in the panel is Gerold Permoser. Gerold Permoser is CIO and Chief Sustainable Investment Officer at Erste Asset Management. At the beginning, at the introduction, I mentioned that Maria's book has the virtue of speaking about practical examples of sustainable investment from part of fund companies. In the case of Erste Asset Management, you have an alliance with Worldwide Life in Austria. How has been your experience with these alliance?
Well, let me give you a bit of the background. In Austria, we started with sustainable investment in our company at around 2000. And in the German-speaking area, the ESG, the sustainable industry, started predominantly out of an ethical approach. So it was about doing the right things and not so much about an integration approach, which came later on, the performance part of it. And given that, it was quite natural for us to reach out to the WWF. And in 2006, we were able to convince the WWF to enter an agreement of collaboration with us. And the collaboration basically is we set up a fund, the WWF Stock Environment. And in this fund, we invest predominantly in ESG topics, in themes, renewable energy, recycling, mobility, water treatment. And the involvement of the WWF is in the investment process. It's a two-stage process. First, we agree on a universe. The universe, here, the WWF plays a part indirectly. How? We set up an advisory board. The advisory board consists of independent experts, mostly university professors, which have to be okayed by the WWF and us. So both sides have to agree on the experts. Then the experts move to the advisory board. And then the advisory board, every stock we want to get into the universe has to be okayed by them. We have to pitch for every stock, and then the advisory board okays them. The second part is the traditional investment part. This is, of course, entirely done by us as an investment company. What is the advantage for us and the WWF? First of all, for them, it's funding. Part of the management fee goes to the WWF. They got about a little bit more than 2 million euros over the last 13 years. And these 2 million euros funded projects. We were able to protect the tributary of the last wild and unregulated rivers in Austria. We supported the biggest tiger reserve in Southeast Asia. It's about 84,000 square kilometers, about the size of Austria or Andalusia. I think it's exactly the same. Or we did projects in the Amazon which were financed out of that money. Experiences. So what were experiences we made? First of all, through this collaboration, we were able to access a new client base. Of course, the WWF has a lot of reputation, has a lot of credibility, and through the cooperation, we were able to profit from that. It's a very simple approach. And of course, people who have a strong interest in the environment and believed in the credibility of the organization of the WWF, they were willing to invest in the fund. For the WWF, it was interesting to get an insight into the financial industry. They have a long tradition of engaging with companies to get their interests through, but they realized that if they engage with the financial industry, they have a leverage. And they knew that they have to get experience, and this project was part of their educational journey, I would say, and as well, of course, they got finance out of it. some learnings we had on the way. There's room for misunderstandings if you team up with an NGO, I would say. For instance, for the WWF, excluding company is a value per se. So when there is a company doing something they don't like, exclude the company, because then people will buy your product. Doesn't work. It was a long journey for us to convince them that this cannot be the argument. There has to be something else. For the WWF, the investment process and the significance of benchmarks is something they didn't understand. If you have a commodity fund with an energy benchmark, it's very hard to divest from energy. So here they also had to learn how the industry works. Here also something that was difficult to grasp for them. As an NGO, they had the understanding the money we manage is our money. It's of course not our money, it's the money of our clients. We have a fiduciary duty, and we cannot do whatever we want with the money. That is something NGOs have difficulties to accept. Of course, we cannot simply divest from anything we don't like if we don't tell the clients. And here, I think, and going forward, this will be interesting because there are regulatory changes. But so far, it's very easy if you have a responsible product, a sustainable product, ESG product, whatever you name it. There you're free to do whatever you think it's right. But if you have heritage business, it's much more difficult. You cannot simply divest from and do whatever you want. And something that was also very important for the WWF and also for us in the meantime, an NGO is dependent on donations. So for them, reputational risk is the big thing. They cannot afford to team up with somebody who shows up in the Panama Papers the next day or anything like that. So it's a risk for them. They knew it. Of course, they didn't know of the Panama Papers back then, but they know that there is a risk. And so whenever we talk about companies, the risk of doing the wrong thing is much more important for them than for other organizations, I would say. And this is something I think that helped us to keep us at the edge where we're gotta be, to really include that in our thinking. Nowadays, the reverse happened. Before that, the WWF was clearly one of the good ones. Nowadays, there are more and more cases where also the WWF, as a very big NGO, has reputational issues. If you think palm oil was named before, they are into certifying sustainable palm oil. If there is, that's a controversial topic. They're in the media with them, and all of a sudden you have to defend your partnership with somebody who is supposedly on the good side. So this is also something we didn't expect at the beginning, but in the meantime, the reputational risk is on both sides.
Thank you, Gerold, for sharing the experience of your fund company. My next question is for Farida Lindemann. Farida Lindemann is Senior ESG Specialist at NN Investment Partners. Farida, in the book you tell us two cases of engagement, one about palm oil and the other one about fossil fuels. How do you choose these themes of engagement at NN Investment Partners?
Yeah, thank you for the question, and also thank you for the invite. I think a few words on NN Investment Partners. It's a Dutch asset manager. We are a third-party asset manager of NN Group, which is a listed insurance firm based in the Netherlands. Very orange, very Dutch. Has its heritage in actually sustainability for over 20 years. We started actually managing a sustainability fund 20 years ago, so a long heritage on that front. And Maybe sort of touching base on engagement, it's one of our core strategies when we look at responsible investment. We believe that engagement can be used to really make changes on the positive side. And we also need engagement to help companies make that transition and to make them aware of that the transition needs to happen. We use that strategy because we think that if you exclude a company from the start, they will not make that transition because somebody else will buy them and they will probably not make the effort to engage with them on a certain topic. We approached engagement on 3 different levels. So we look at sort of themes and that we base on the Economic Forum. The Economic Forum has established basically an annual overview of the most material risks. And when you look back 20 years ago, it used to be economic risks. So they were all focused on financial well-being and also governance a bit, but sustainability was not there. Looking at the material risks nowadays, they're almost all focused on sustainability. There's the carbon risk, there's the deforestation risk, there's water scarcity, the antibiotics use, food problems that we might face in the future. So the risks have shifted quite significantly over these 20 years. And we've also sort of based our engagement approach on those and said, okay, which themes do impact us as an asset manager the most? Because when you talk about engagement, you can engage on 50 different topics and you can hire 200 people to do this for you, but it will never be enough. There will always be more topics to engage on. So you have to make a selection. You can't engage on all of them. You have to make a selection. And that's what we did as well. So we chose on the basis of that, we said, well, there's a few commonalities. One is basically based on food and nutrition, and it's a very broad topic. So we also looked at different engagement options underneath that theme, and I will go into that a bit later. Climate resilience, so are companies ready to make that transition and not so much focus on carbon reduction in that sense, but really focusing on, is management actually capable of making that transition, or is our company still at the starting point? We look at the role of technology more and more, especially in the financial industry. We're faced with cyber attacks and all kinds of other great privacy and issues. So how do we deal with that as an engagement point of view, especially in the financial industry, but also other companies are faced with this on a daily basis, and it impacts us quite significantly, especially if we're moving towards a very technology-based world. And then last, but it's actually one of our most important parts, is corporate governance. It all starts with that. It's making sure that companies are equipped, or that management and all the structures are actually equipped to deal with these issues. And if you have a management team or a supervisory board team that is not capable of managing these issues, you will never make the changes. So it's actually start with that. When we look at engagement, we have those themes, and then we sort of started off with also looking at controversies, and it was mentioned over this panel already a few times, but also on the last panel. And controversies basically starts with companies that are involved in controversies, and these controversies flow into our systems and say, well, okay, this company is involved in huge deforestation issues in Indonesia. And that's where we sort of say, okay, we have already several of those companies that are related to this same issue, so we sort of start an engagement process on the basis of that issue. And the same goes for some other controversies, especially related to human rights violations, which we see a lot, and pollution, which is very common in the material sector, for instance. So we selected basically 2 of the themes that we highlighted in the book on palm oil on the basis of that. Palm oil was really based on the controversial issues that came flowing into our company. It wasn't just research that we bought and that said, well, you know, there's a lot of risks involved with the palm oil industry. There were also NGOs that were knocking on our door and asking us what we were doing with palm oil. We even had protests at our AGM. So there was a lot of pressure in the Netherlands to actually deal with the topic properly. We don't have a lot of exposure in the palm oil industry. Let me make it very clear. So we only had like 3 companies in our portfolio at that point in time when we started. But we said, well, you know, it's big enough and it's such an issue that we will start an engagement with the sector overall. And we will not just look at the companies that are producing, but we're also looking at the companies that use the commodity in their supply chain. So when you look at, for instance, the bigger supermarket chains or the bigger retailers, everybody uses palm oil. And a lot of people underestimate it, but it's basically in your shampoo, in the products you eat on a daily basis. It's almost everywhere. It can be replaced with another oil or vegetable oil, but palm oil is very cheap, and it's very easy to produce as well. So it can only be produced in countries that are close to the equator because of the temperature. So currently Indonesia and Malaysia are the most productive companies in terms of palm oil, but there's also a lot of palm oil cultivation happening in Africa nowadays and also in South America. And we started sort of a collaboration with several investors within the PRI platform. So the Principles Responsible Investment, and we sort of, with a few investors, we went to palm oil producing companies, but we also spoke to the food retailers, and we spoke to banks. So this year we also focused our engagement efforts on banks in the region that invest a lot in companies in the region, especially on the palm oil side, to see what we can do to improve the situation. And we have seen quite significant results already where companies are disclosing a lot more information about what they're doing, that they're actually improving their sustainability practices, that they come up with a no deforestation policy or a high carbon value approach policy. So you see that there's a lot of development in the sector that we see as a result from this engagement.
Okay, thank you, Farida. And to finish this first round of questions, I think it's important to speak about gender equality. And to speak about gender equality, we have invited Yuri Lustenberger-Kim. Yuri is Head of Inclusion and Diversity at UBS. Yuri, how do you measure the impact of gender equality when building a portfolio?
Thank you so much. Before answering that question, I'd like to put on my gender sunglasses. So this is how we should be looking at the world, through the lens of gender lens wealth, gender lens investing. At UBS. So can you hear me now? Okay, great. So if you look at the world through gender lens, the screenings that are done. How many of you have done gender equality screenings at due diligence on companies? Okay, so I come from Switzerland, so I flew in from Zurich last night at the invitation of Pedro here at UBS Asset Management. As you know, the firm UBS is the preeminent, the highest brand recognition Swiss universal bank. We have about 60,000 plus full-time and almost half as many of contractors. So our workforce globally is about 100,000. We span over 5 divisions, UBS Asset Management being one of our smaller divisions. Of course, our wealth management division is our biggest, and we are the largest wealth manager in the world. We also have investment banking that has been pared down to core topics after the scandals in the spanning the last 20 years. And then we also have our corporate center division where we have human resources, all the control functions like legal, risk, compliance, finance, and that's where I sit. When we look at gender topics, so I'm looking at the room here because I'm always looking at every place. So the panel is 50-50 here. The audience is, I would say, even heavy on the women's side. To have female board members We have 4 at UBS, we're proud to say, out of 4 women, 8 men. That is an appointment. So when you look at a company and screen it for the gender equality scaling of 1 to 10, you want to reward the ones who are doing well, promoting gender equality in the workplace, having policies and initiatives in place to ensure that women rise to the top at the same pace and in numbers as men. Board membership has been a focus of many companies to see, okay, you need to have a certain number of board members. Are you aspiring to get to 30, 50%? That is just the tip of the iceberg, right? Because to appoint an experienced lawyer, finance person, asset managers on the board of a large company, publicly listed company, is a search, executive search exercise, trust, getting that person nominated and on the board. The second challenge is what we call the executive board. That's where the management of companies are actually run. So we have a 13-member group executive board. Currently we have 1 woman. We're trying to increase that. The P&L functions that are represented on the group executive board should contribute and nominate female next gap members, and that's what other companies are also trying to do. So UBS aspires to have 1/3 of managers, female managers, in management roles. That is our commitment that we made in 2015, and we're working towards that. I cannot share where we are right now, but we are really working hard to make sure that female leadership is represented at the top. So when I look at the crowd here, which is very different than the Goldman Sachs Asset Management annual investor event that I attended in November in Zurich, there, 90% of the participants were male. So it's great to see so many women here in the audience. Does that mean that SRI and ESG topics are more friendly towards women, or that somehow that kind of focus in asset management business has not filtered out the women, as we often see in investment banking, where women already, they study economics, finance, more than 50%, but then when it comes to choosing their career, they go into marketing, the soft things, communications, and they don't go into the trading floor. So how can we attract more women to first enter as junior talents, keep them? At UBS, we have established 3 levers, very simple to remember, and that might apply for your companies as well. Simply, we try to hire more women, promote more women, and lose less women. So those, hire more, promote more, lose less. Very simple. How do we achieve that? We look at everything from the recruiting process, from job descriptions, make sure it's de-gendered, to once you onboard them, make sure that you track the promotion rates, that they are seen in front of the MCs, that they're given mentors, sponsors, their talent development and nomination process to key talent programs are scrutinized by the HR business partners, and then you try to lose less of them by providing an inclusive corporate culture, gender balanced, etc., all that we know. So decades of studies by the likes of McKinsey, Columbia University, where I went for my undergraduate, Goldman Sachs, Deloitte, they have all established, it's beyond doubt, that diverse staff, diverse leadership, companies that have promoted that and have been lucky to benefit from that, outperform their peers. So in terms of looking at the screening of gender equality in firms, UBS is doing its share to empower the women that are closest to us. making sure that maternity leave, paternity leave, gender pay gap topics are addressed. We do benchmarking every year to make sure that same roles result in same pay for our women and men. So these are some of the few qualities that a screening can really impact and bring forth the companies that are doing well and reward them by including them in the various portfolios that we have.
Thank you, Yuri, for your perspective on gender equality, but as you said, at least we have made the gender equality in this roundtable.
May I add something here?
Yes.
Last year, on World Women's Day, I attended the CIO Forum of institutional investors. There was one woman participating. They told us that they have the same forum happening in Riyadh, Saudi Arabia. They told them to make a picture of the attendees there, and they had 4 women. So even Saudi Arabia did better than us.
Yeah. Thank you. Well, for this second round of questions, I want first to go maybe a little deeper into the debate between exclusion and engagement. I know that we have already mentioned this debate in the first roundtable, and we know that for many asset managers, exclusion is only one of their social responsible investment factors that they include in their investment process. But there are fund companies for which exclusion is their only strategy, let's say. How can we move towards more sophistication in the industry regarding this debate between exclusion and engagement? Julie, do you want to begin?
Yes, yes, sir. It's true, as you mentioned, that exclusion is the most widespread approach of responsible investment. It's the first step to start a responsible investment approach. But there are a lot of other approaches that have been created over years, and Europe has been a pioneer in the world. So in Europe, you can see best-in-class approach, best-in-universe, thematic investment, impact investment, ESG integration. So actually the offer is quite widespread already. And I think it's a good thing because it allows investors to find and choose the approach which corresponds the most to their constraints or objectives. And this approach can be complementary to each other and work with each other. In terms of sophistication and development of the responsible investment practices, we see a lot of initiatives and positive trends to force investors and asset managers to really start investing in a more responsible way. So we mentioned in the first discussion all the works that is done at the European Commission and Parliament level, so with the European Action Plan for financing sustainable growth, which translates in different actions that have started to be voted by the European Parliament. So this is at the European level. At the national level, I would like also to mention the French law for energy transition that has been released after the COP, just after the COP21. And so it's a law for all sectors to move the economy towards an energy transition. But there is one article, so Article 173, which has been designed specifically for investors and for asset managers, and which requests each investor to publish and to explain how it integrates ESG issues and climate issues in all funds above 500 million euros, or to explain why not, if it's not the case. So it's a comply or explain obligation. Either you do it and you produce a specific report or add some information in your legal documentation and marketing documentation. And if you do not do it, you have to justify why you don't do it. So it has been a real change in France, and we have seen all our clients, investors, pension funds, insurance funds, coming to us to ask us to help them build this specific report, and we have had to build also our own reports. And this initiative, not to mention the potential eco-label that is going to be designed as well at the European level, it creates a real ecosystem to push everybody, both investors and asset managers, in the same way. And at the global level, there are other initiatives. I'd like maybe to mention the SDGs, so the Sustainable Development Goals of the UNO, sorry. So it is not a regulatory constraint. It's the 17 goals, very general, to fight against poverty, to fight for gender equality. There are a number of objectives linked to climate change and energy transition. So it's a global framework. It's not compulsory, but it's a framework to allow discussions between corporate and investors. But on top of these initiatives, I think that what will be the real game changer will be mainstreaming of ESG integration. At Amundi, for the moment, we have a specific responsible investing offer, which amounts to 280 billion euros, with SRI funds, with thematic funds. So not only exclusion, because exclusion is applied to all our active management portfolios. So it's exclusion plus really an SRI filter, or green bonds, or green tech in equity funds, even in real estate as well. We have SRI products. So these 280 billions represent almost 20% of the total assets managed by Amundi. And our objective in the 100% ESG plan is to apply ESG integration to the 80 remaining assets. So we will not transform everything into responsible investment. It's not possible. We have more than managed 1.5 trillion euros, but we want to have ESG objectives and measure ESG performance on all the other funds. Just in a word, concretely, how it will work, and we have 3 years to do it. We will give an ESG rating to all our benchmark indices, because we are already able to do it for all our funds thanks to our own ESG rating system. And we will, all the funds will have to have a better ESG rating than their benchmarks. So that means that very basically, traditionally, you compare a fund to its benchmark in terms of financial performance, and you look to have over performance compared to the benchmark. And tomorrow, we want, on top of this financial performance, to also have an improvement of the ESG performance, to really have the both legs, financial performance and ESG performance. And we think it will be a game changer, and other industries, other asset managers are starting also to think to develop that kind of mainstreaming.
Okay, thank you, Julie. Someone who wants to add something about this debate?
I mean, I think Julie covers everything pretty much about.
Sorry.
No, it's good. It was very good
do
answer,
it.
so it's good. But I mean, and linking this second question with the first question that you just asked me about why ETFs in the ESG, and I think Julie mentioned a very good point, while saying that we should grow. And we should grow this sustainable investing theme. So I mean, it's not only about ETFs, it's also about active mutual funds. Actually, actual mutual funds taking like the big portion of sustainable or ESG investing right now. And of course, BlackRock is managing $6 trillion And as you said, fiduciary to our clients, under the name of our clients, I think it's really important the role that we have in the society when you're talking about investments. As Julie also mentioned, we don't only have exclusion ETFs or exclusion products. We have also more advanced products like you mentioned, thematic, for example, or impact investing. And we are applying these approaches also to the active management part of it. So we are working with the entire ecosystem. So for example, benchmark providers. So we work closely with benchmark providers to try to build out a more sustainable indexes, incorporating our input from our clients into those benchmarks. So I think it's like a matter of we that are here, and of course our clients and investors that rely on us to deploy this work together, try to really build up a more efficient way of sustainable investing. And I think we should have pretty much worked together on this. So that's it.
Well, I think that there are some natural progress happening in the industry. I talked to a consultant last week, and he told me that they had 700 ESG funds or sustainable funds in their database in 2017. They had 7,000 in 2018. So knowing our own journey in the topic, for me it's clear you cannot build up a full-fledged sustainable process in 1 year. So the easiest way to do it is you exclude something. And I think that this is also part of the story. If you want to get into the topic, you exclude something and you label yourself as an ESG product. Naturally, this is going to change over the next years because the processes of these companies will become more sophisticated naturally. In addition, I would say that also Austria is German speakers love exclusion. They love it. Just to give you an example, in Austria, for part of the pension industry, you're only allowed to invest in a product if it has the Austrian Umweltzeichen, which translates roughly in eco-label. To get the Umweltzeichen, you have to exclude 50% of the universe. So it's a prerogative. You cannot get the Umweltzeichen if you don't do that. So we don't shy away from it. Nevertheless, as soon as we tried to sell our products internationally, we found out that exclusion is, it plays its part, but there are other tools in the toolbox of ESG investors. And you have to have these parts, or these tools as well, and you have to apply them, and you have to apply them well. So I think that this is also something that will happen naturally. The industry moves in that direction. And I think you mentioned it before, integration. This is something that I also learned in my experience. I'm the CIO, but also the head of sustainable investing. And as soon as we brought together traditional portfolio managers and ESG managers, and we didn't look at ESG investing as a pure ESG investing topic, but as having information, sharing information, and using the information to the benefit of all the investments we do. All of a sudden you become a lot more sophisticated without doing anything special.
Yeah, the Dutch look a bit like the Austrians in that regard because we like exclusion as well. It started actually in 2007 when there was a television program on that the pension sector in the Netherlands was investing in controversial weapons and especially cluster weapons. That led to a big wave of exclusion policies in the Netherlands. That was actually the start of it. So everybody started excluding controversial weapons, first cluster munition, then personal mining. You have now nuclear weapons that are excluded by many investors, and et cetera, et cetera. So it went from one television program, that's how it started, it went to exclusion policies. Nowadays, there's no investor in the Netherlands that doesn't have an exclusion policy. And they can be quite elaborate. Some start with just controversial weapons, and others have, what we have, for instance, tobacco, oil sands, coal mining, but you also have a lot of other topics that can be excluded. The list can be very long. But like I said, it's not about exclusion. It's really about making the investment in the transition as well. And you only do that by investing in those companies that and help them as well to get along that path. And what needs to happen in the sector as well is that a lot of investment managers are still looking at it, and the same goes for Dutch asset managers in that regard, are still looking at it from a risk perspective. ESG is not a risk, it's actually an opportunity. And as long as people don't start believing that, it will never happen. And a lot of research nowadays has come out, academic research, but also brokers have done a lot of research that proves, UBS actually that has written quite a lot of good and substantive research on the topic, that actually if you invest in ESG or you invest in sustainability topic, it pays off in the future. A company that can develop their ESG practices over the long run can also improve their share value, and that's an opportunity for investors to look at as well. SDGs, it was mentioned already, it's an opportunity. If you invest in the impact of a certain thing, it can have a huge impact in the future, and that might not be that financial material thing that you would like to see in the short run, but it will have a positive effect in the long run, especially on your financial material risk.
That's a nice segue, thank you very much. So I'd like to share 3 initiatives that we have at UBS where we're contributing to make this world a more gender equal place. We are proactively speaking to our clients about how they can help. So we have the UBS Optimus Foundation, where we focus on providing seed money to companies that are focused on raising education for girls. We're focused on children at UBS Optimus Foundation, and we did our first impact development fund back in 2017 to support the educational initiatives in the African continent. And we found through our research in developing this impact fund that if you educate a girl, that they add to their country's GDP, that they're less likely to get pregnant too early in their life planning, that they have fewer children but healthier children, and that they earn more later. That's commonsensically supportable. We also initiated our returnship program, so we realized that many of you here are mothers and fathers who may have taken a break, career break. We launched our UBS Career Comeback Program, where we are tapping a new source of talent in women and men who have taken breaks in their career and would like to return to the corporate workplace. This is our 4th year running it. It legitimizes the breaks that all of us might have taken or imagined that we could take for taking care of our elders or taking care of our children. In the Nordic countries, where they have very, very, very generous and innovative and socially responsible paternity and shared parental leave, the topic of actually taking a career break because you just couldn't imagine yourself doing both well at a certain performance level. Maybe that's not applicable, but in Central Europe and in Switzerland and in the major regions where UBS operates, the returnship program has really resonated because there are talents out there hoping to return to the workplace. And then one last piece of recent research that I'd like to share with you, and before that, see, I see men in the audience. Engaging men at your firms, it's one of the ways of increasing gender diversity topics to be for both men and women. So at UBS, we have initiated our Dads for Daughters campaign. So how many of you here have daughters? Dads for daughters, okay. 1, 2, 3, because the more daughters you have, exponentially, the chances of you being an ambassador for gender equality, for your girls to come to the workplace that is more level playing field, you are very, very easily activated because you see the future through the eyes of your daughters. So we initiated this amazing Dads for Daughters campaign where we invited seniors. The criteria is that they had to have daughters, at least one. And we asked every senior manager at UBS to take a pledge. What would you do to make UBS a more inclusive workplace for your daughters in the future? Would you like your daughter to work at UBS? And this really raised a lot of awareness and also kind of self-reflection on the kind of managers that you want to be, the kind of inclusive leaders that you want to have throughout the mid-management and upper management. So I urge you guys to also look at your senior male population to bring them on the gender diversity journey. And the last piece of advice, it just came out on International Women's Day, so I hope all of you had celebratory lunches and speeches and panels last Friday. The theme continues during the whole month of March, so we had an event last night, which I was unable to attend, with 100 Women Finance, where we talked about private and public finance for social good. Is how, I want to take a little bit of an interactive survey. So how many of you here, women, take the lead in making long-term financial decisions and plannings like insurance, retirement, long-term investing in your family? Wow, that's great. And how many of you would you say you let your spouse, your husband or your partner take the lead in long-term financial planning? Oh my God, you're like Brazil and Mexico. So we surveyed 3,500 women across the world, but we didn't come to Spain. We went to Italy, Switzerland, Singapore, US, and what we found is that 60% of women, and this also applies to millennial women, unfortunately, 60% of women defer to their partners the long-term financial planning, although more than 80%, close to 90% of women do the daily finance, like checkbooks and paying bills. So how is it that we women here in the room are deferring very important decisions as we live longer? As we live longer, we could be widowed, we could be divorced, and actually deferring that to our male counterparts. And when we ask the question is, oh, my husband knows better, he is the main bread earner, it was always set up that way, I don't know much about investing. So when we, as a result of that survey, now we are going to be providing, yes?
My husband is an economist, and I'm a lawyer. And he's been in the financial market for 30 years, and I've been working as a lawyer. That's why.
That's the reason, right. But we found that those couples who take equal play and role in the financial planning, that they feel more secure, that they're happier, that they've taken this joint responsibility. And some of the women said, well, I was too busy taking care of my children and running around and working full-time, so I didn't have time to look at the long-term financial investment aspects. But I urge you to tell your daughters, tell yourselves, if you are not taking charge, to take more interest in your long-term financial planning. And what we're doing at UBS is we're going to be educating our employees about financial planning. We're going to raise that topic with our female clients. As you know, we have a UBS Unique Client Women Segment initiative where we are targeting as a specific client segmentation women and bringing them as a client segment new prospects because 2% of the wealth managers, actually only 2% see women as a separate client segmentation, whereas 30% of private wealth is under the stewardship of women. So I wanted to share all that we do at UBS, and check us out at ubs.com.
Thank you, Yuri. I'm afraid to tell you that we have run out of time because I've prepared 2 other questions, but we don't have time to read those questions. So thank you, Julie. Thank you to all of you. Thank you, Yuri. Thank you, Farida. Thank you, André. Thank you, Gerold, for your participation in this panel. Thank you very much. It has been very interesting.